It revolves, or begins on page 313, and it revolves around inventory, recording of inventory. The book, again, if there's some pages I'd like you to read, it's these first couple. There is a very good discussion on the accounting methods, inventory methods, LIFO, FIFO, average, and they do some nice examples of how they work. How does FIFO work? How does weighted average work? And also, it talks about periodic versus perpetual. And what does perpetual mean? As it happens, basically. So every sale, every purchase, inventory is updated immediately. Unlike periodic means maybe at the end of the month we take an inventory count and then we adjust, or certainly at the end of the year, and then we make an adjusting entry. So with most software systems, Sage, QuickBooks, they're perpetual. They'll use perpetual. So we're tracking inventory quantities. We're tracking those costs associated with those inventory items. Now, when we have a sale, what makes inventory very difficult to set up is that you are influencing a lot of GL accounts, right? Mm-hmm. So you don't wait till the end of the month after you entered in 200-300 invoices and then look at your GL. You must do it immediately if it's the first time you're using it. You want to make sure that the proper expense accounts, right, cost of goods sold, and sales tax are affected. So they talk about setting up those new inventory accounts, including sale accounts. And just to mention here, these sale accounts could be quite numerous, right? It all depends on what information you want to track. If there's a certain segment of your business that you want to track, well, you got to set up a sale account to track it. Or if there's a specific part number that you want to track, or various parts that you want to track, you have to set up those sale accounts. Determine profitability by segment or product line. So here again, you have to think ahead of time before you start your inventory process. What information do I want to track? Don't just blindly pick one account and that's basically what we're going to use for everything. That may not be useful information. So always be thinking about what you want coming out of the system. Whenever you start a new system, page 322, we have to set up a default section. The setup of default, or any default, makes new item entry quicker. It saves you a lot of time. If I can set up the method, the inventory method, FIFO, LIFO, get that set up, if I can just set up a default cost of sales account, inventory account, those kind of things, do that ahead of time, it makes my entry process a lot easier. Again, I'm thinking of a hardware store, so many parts, so many pieces, right? So if I can save some time, do that in this default section. So it talks about the different things that are found in this default section, specifically this default GL accounts. And then it talks about what quantities or when quantities are tracked. And there are types. Just like with our GL accounts that are typed, inventory is also typed. So here I'm going to show you that. If I go under inventory and services and under inventory items, I'm going to click new. The type that they're talking about is this item class. So please know for your assessment or your case, what item class does inventory track quantities on? So right now, if I pick stock item, you'll notice that the quantity on hand, quantity available, maybe a UP sticker, unit cost is all there for us to choose and select. But if I change this from a stock item to a non-stock item, a lot of those things disappear, right? Non-stock, I don't track quantities on. Or for instance, maybe if I pick a service item or a labor item, again, does not track quantities on. So here, what I sometimes will do for clients is, well, it's so difficult to track or put everything in all at once. So I might do a subsection of an inventory. Let's start here and do that, make sure that's going, and then go on to the future ones. What I have listed next in my handout is an overview of each of the tabs. Okay, so what is under the, I turn the page here. I don't have it listed here. I have it all under the default section. So let me go to the default section. Let me clear off this screen. Oh, it's gone already. So under maintain, default, and inventory items. UPC's ordering. Do I use purchase orders? Sale orders. GL costing. There's a lot of information here. Again, these are all default sale accounts and inventory accounts. What is 12,000? Normally it's what? It's a one number. It's the actual merchandise inventory. So that's affected. And then the cost of sales are the 5,000. You'll notice that you can pick FIFO method or LIFO method or weighted average as our costing methods. And here again, once you pick a method, it's the method that that company uses forever, right? It's not something that you can easily change. You can change it, but it's very difficult. So that has to be considered. Most clients, most small companies will use the average as their default inventory method. Because it's so difficult to maintain a FIFO and LIFO method. I've only had one client that did LIFO, and that was a gravel company. Okay. Because the last in was, because it's a gravel pile, it's the first out, right? So that was one case. I know some companies will use FIFO for book, LIFO for tax, if their software can handle that. Because in some cases, if prices are rising, LIFO will give you a lower tax. Because your costs are higher later on, right, when prices are rising. In fact, that brings up a good point. I'm going to make that note here. My notes here. Let me add a page. I'm talking inventory costs. When inventory costs are going up, LIFO method will have the higher costs in cost of goods sold. Right? When prices are going up, and that's the tax gain here. Remember, our tax gain is to make the lowest profit. So if prices are going up, obviously those costs are coming out first. So our cost of goods sold are affected with a higher number. Obviously, the opposite of true. If prices are going down, then FIFO would give you the higher amount. So for tax purposes, a lot of clients will use LIFO method. Because of inflation, in most cases, costs are going up, right? And that's why they use that method then, to have a lower taxable income. So just be aware of that. Taxes and shipping. And this is on the bottom of page 1. You'll notice here the number 1. That means it's a taxable item. Then there are 9 other ones which are exempt for whatever reason. So number 2 is exempt, number 3 is exempt. Remember that depending on what you're selling, some items are taxable and some are not. If you're at a grocery store, what's not taxable? Anybody work at a grocery store? Milk's not taxable, bread. But what is taxable? Soda. Prepared food is taxable. Alcohol is taxable, right? So that grocery store would have some of those items as a number 1, though if they were taxable, or a number 2 if they were exempt. So that is what the software is used for, is to track that as well. There are customizable fields. There's 5. Like with a new customer or new vendor, you can have 5 different additional things that you may want to track. And then obviously they get really carried away with price levels, wholesale price versus retail, maybe government price. So you can have different price levels if you wish to. So those are all found in that default section that we talk about on the end here. Just know that here what number 1 means and what number 2 means. These exempt reasons are services exempt for tax, and that also would appear on line 3 of the ST12, which is our Wisconsin sales tax report. Line number 3. I do have a screenshot then of that default section. And then below that on page 2, And if you want to, you can go to page 326. There's a lot of information when setting up inventory. This is an item that's already been established. So we have prices, sale prices, cost, right? We also have the GL accounts affected when I sell this item. So the sale account, the inventory account, and then the cost of sale account. Since this is a stock item, we will track quantities on hand. On hand means we have it. What's coming in under a PO, right? And then what we should have available shortly. It also has a minimum stock of 6. Everybody knows what that means. When the level gets to 6, then it's automatically PO is issued. And then finally, how many do we order at a time? That's the reorder quantity, 3 in this particular case. Not sure why we ordered 60 then, if 3 was the reorder quantity. But that's another point. Maybe there's something going on there.
Yes, sales coming.
Could be. Or somebody wants 57 of them for themselves. Okay, and then finally I make a note. The history tab. Like with accounts receivable, like with accounts payable, inventory has a control account, right? It's called inventory. The report that we run is called the valuation report, the inventory valuation report. The inventory valuation report. That has to match the control, just like accounts receivable and accounts payable. So here again, your banker will ask you to run the aging report for accounts receivable, the accounts payable aging report, and those better match what's on the balance sheet. They will also ask if you're tracking inventory, the inventory valuation, and that should match the inventory number on our balance sheet. Makes sense, right? So here again, if I use the history tab to put in beginning balances, this will not affect the control. Just like with AR and AP, doesn't affect that control account. So we'd have to again make an adjusting entry like we would in AR and AP. Has anybody ever did inventory counts or spot inventory counts, worked at anywhere? Very important function. Again, a lot of theft occurs in inventory, right? Mm-hmm. So you really have to be careful when dealing with inventory. To minimize theft is basically your job. So on page 3, I'd like you to go to page 330 of your book. And for whatever reason, they talk about sales rep in chapter 8. Not sure why it's here. A sales rep is assigned to a customer, right? What's the role? They're basically the person that goes to the customer and says, how are you doing? and if you need any orders, right? That's their role. A sales rep is an independent contractor. In other words, a sales rep is self-employed. So instead of getting a W-2, what do they get?
1997.
Yeah, the 1099, right? So that, do mention that again. A 1099 has to be given to them at the end of the year. And they are given that form if they've exceeded $600. Please know that. If they exceed $600 in payments to them. And I do put some penalties there. Failure to issue a 1099 by January 31st of that year or the next year. If you fail to do that, it's $530 per form or 10% reported on the form, whichever is greater. So if you have 10 independent contractors, $5,300 as a minimum. So the software tracks that under employees and payroll. And you'll notice here, you can create your 1099 vendors. Now, again, in my book, this sales rep should not be here, right? Even if I go into a new employee, the toggle button is right here. Again, why is this even here is beyond me. Where should sales reps be instead of employees section? Contractor, which would be where? On the vendor side, right?
Yep.
That's where this should be, not even involved in here. Because the IRS will like to make that person an employee, right? What makes them an independent contractor instead of an employee? What are some of the tests? You remember from payroll? They have to be independent. That's why the word's there, which means what?
Working for themselves.
Working for themselves and other companies, right? They set their own times, they set their own rates. So this person has to or needs to work for others, not just this one company. That's the main reason, or main requirement. If this person only worked for this company, ooh, that's dangerous. That would really be hard to prove that they're independent and not an employee. Okay, going down on the bottom of page 3, just as a reminder, we talked about this already on page 337, POs have no effect, or purchase orders have no effect on the GL accounts. It's just a order. It's not that we've received it yet, correct?
Mm-hmm.
Once we get that receipt and an invoice, right, that's when it becomes a liability to us, and that's when it affects our GL accounts. So please remember that. Finally, we've already talked about this as well. I'm on the vendor side, right? It's a debit memo, which means what? I've reduced my invoice for some reason. Either the item was returned or we had a reduction in cost. So whatever the debit memo is or reason for it, remember what's, please watch the discount. The early payment discount. might have to override Sage's amount. You might have to override Sage's amount. Also be aware that that discount has no effect on the inventory valuation report. Okay, so I'd like you to turn to page 343, please. I'm going to see if I can prove this to you. The SK2 item. The cost is $1,200. $1,207.50. Is that right?
Yes.
It's 23 FIFO method, total cost $1,207.50. Can someone tell me what the 30.3 is? 30.13 is?
That's how much it is in your total inventory.
The percent.
Percentage of your inventory.
Percentage of total, right?
Yeah.
The reason I point that out is one time I asked for the inventory valuation amount, which is really $4,007.50. I got 100. Okay? So here again is that looking at the report, make sure you know what's on it. So be careful. So, going back to the dollar amount, if I go back to page 341, what is the dollar amount there? What did I actually pay for it?
The 1,183.35.
A difference of what?
24.15.
Oh.
Is that the discount?
Yeah. $24.15.
Okay. Which number is on the balance sheet? The blue one, the 1183, or the 1207 red one?
This stop, right?
You did the red one.
No, the balance sheet would be this one. That's the control. The valuation report, the aging report.
Oh.
Which number is right? Which is the more correct number? It'd be the control one. Because what did we actually pay for that inventory? We paid the 1183, right? Okay, so now I give them the balance sheet with 1183. You run the report, it's 1207. What's the banker gonna think? They don't match, right? So we have a problem here, caused by those discounts. So my point is to realize what affects the reports. The early payment discount has no effect on the valuation report. Remember putting that in your net solutions? It asks for the discount account on the vendor. You put 12,000 in, right? Which is the inventory account. Well, that's what it's doing. It's going to put that discount into this account. Okay. So my point is you can have the difference and know why it's causing it and explain that to a banker. Or I can change the account from 12,000 to maybe a purchases discount on your income statement. Then they would match. from 12,000 to a discount expense or income. It's really income to us,
Yeah.
right?
Mhm.
I could change it. Then they would match. So that's what a lot of clients do. Some keep it like this, realize that the discount is the problem or the reason, or they actually change the default to an income account, miscellaneous income. So, on your case, I want you to see how the valuation report and how the balance sheet, how they differ. I want you to see that difference. And know it's caused by what?
The discount.
The discount. You have to tell me that. What is the difference? Tell me that. What is the cause of that difference? The early payment discount. Going through our control and not our valuation report. So something so simple, one thing, can cause a difference on my reports. So you have to be careful. Okay. Page 4. The case. Can I have you go to page 348, please? Kathleen's design. It's the month of January is the time frame. You have to create a GL account for inventory, a GL account for cost of goods sold. You have to create a vendor, a couple vendors, and a couple inventory items. Look at the item class. They'll be stock items, right? Stock items. So we're tracking quantities and costs. The thing I want you to do for me on page 350, if you could turn there, please. On January 11th, the second one, not the first one, the second January 11th, I would like you to issue a credit memo, or excuse me, a debit memo against the invoice. This is on, the stencils were bought from Martin's. The invoice is originally from Martin Hardware or whatever it is. Okay. Then, on January 20th, I would like you to adjust that discount. The discount is computed incorrectly. The discount for Martin's is a whopping 5% discount. So they paid within the 10 days. They're going to get a 5% early payment discount, but you need to modify the amount. Because remember, this 5% was on the original amount. I want you to base it upon the net. So I have recompute, discount on net invoice. Everybody understands what I mean by net? The gross minus the return. So you should have a difference, right?
Mhm.
Between the valuation dollar amount and the GL control. So I want you to compare the dollar difference, right, between the inventory valuation and the general ledger control. What is the general ledger control?
Inventory.
the inventory, which is account number 105. So for this company, it's the account number 105. You should see a difference and know what that difference is caused by. No other changes for the case. The rest of the case is as is. Let me know again, guys, if you have any questions on the case questions. If there's something not clear, sometimes I do that intentionally. Well, maybe not always, but sometimes I do. This is the opportunity to ask those questions because, again, I don't want you leaving here without that basic knowledge. So please let me know how that works for everyone. That's all I have, guys. Sandy has gone, so she's not here anymore. But let me know if there's anything else I can help you with.